Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Let's make a deal. President Donald Trump agrees on a trade framework with the UK and now looks to China. U.S. negotiators weighing a dramatic tariff reduction for Beijing as they head into talks in Switzerland this weekend. Fast track. The U.S. Treasury plans a streamlined process for foreign investments, paving the way for billions of dollars to flow from wealth funds in the UAE, Saudi Arabia, and Qatar. And Mideast mission preparations underway for President Trump's first major overseas diplomatic visit, bringing business leaders to bolster investment ties across the region. Well, it has just gone 8 a.m. across the Emirates. I'm Johanna Versace in Dubai. So much news breaking in the last 24 hours. Maybe let's just start with markets and the price action in markets. The president's yesterday, President Trump saying, go buy stocks. So that's exactly what people did. We saw Wall Street end up in the green. NASDAQ up almost 1% in trading yesterday. S&P up 0.6% today. Some of that momentum is continuing. You can see futures are also trading in the green as well. This around hopes, I guess, into the weekend, those negotiations between China and U.S. officials. The discussions are going to be taking place in Switzerland about potential trade deal or perhaps a reduction in tariffs in the interim. All of those high expectations as we head into the weekend. And of course, the US-UK agreement could be a template maybe for other countries to follow. We'll talk about that shortly. 10-year yields, big movement yesterday, actually. We sold off, so yields moved up about 12 basis points throughout the course of the day, given the risk on rallies. So moving perhaps towards a more traditional correlation with the equities doing well and bond yields moving up in tandem. Brent seeing a bit of a recovery as well. Remember, a couple of days ago, we opened at $59 after that OPEC Plus announcement, surprise announcement. But over the course of this week, we steadily climbed back up again. So that's noteworthy. 0.3% firmer. And then Bitcoin back through $100,000. Why am I calling this out? Well, because it was one of those assets or one of those plays that people had put on into the election, out of the election. It didn't perform well in April when everything else was being sold. But you can see there is a recovery now in Bitcoin. We're back at February levels. So 102,000 is where we're at right now. And a quick look at the pounds. Yesterday, we had that Bank of England meeting. A cut did come. That was what the market was anticipating. But there was a three-way split. There were two members saying that the Bank of England should not have cut rates at all, two members calling for 50 basis points, and then the rest calling for that 25 basis points. So hawkish cut was the initial interpretation from the market. You can see the reaction in the pounds yesterday. Initially, we moved up after the headline came out, but over the course of the day, it gradually moved lower again. So we're still about 0.3% weaker this week for the pounds. But let's go back and talk about some of those trade developments, because expectations are growing for the first high-level trade talks between the U.S. and China since President Trump unleashed his tariff barrage. Treasury Secretary Scott Bessent and Trade Representative Jamieson Greer are due to meet this weekend in Switzerland with Chinese Vice Premier He Lifeng. And Bloomberg has learned that the U.S. side has set a target of reducing tariffs below 60%. As a first step, they feel China may be prepared to match.
Well, it could be. I mean, we're going to see. Right now, you can't get any higher. It's at 145, so we know it's coming down. I think we're going to have a very good relationship.
Earlier, Trump unveiled his first major trade deal since announcing his tariff barrage, a framework agreement with the UK. Prime Minister Keir Starmer hailing the deal, although details still need to be negotiated over coming weeks.
I believe that serious, pragmatic, in-the-room negotiations acting in the national interest are far better than performative politics, people slamming the door, floundering out, being performative but not actually delivering for working people. And I'll continue in the same vein. We've had two trade deals this week by acting in that way.
Okay, let's bring in Bloomberg senior editor Derek Wallbank. Well, 24 hours ago, the president was teasing this huge announcement, and we got it yesterday, this trade agreement between the UK and US. But then it was met with, I would say, a lot of skepticism. Great headline, but not a lot of detail, Derek.
Yeah, that's right, Jemana. I mean, it is a framework deal. The odds that anything was coming or is coming that is going to look like, a multi-year big package that seems to have gotten, tens of thousands of hours of negotiating time, there's no way that was going to happen, right? Nobody was seriously expecting that, I don't think. And anybody who did expect that was wrong. But the idea that we have had, and you and I have talked about this for a solid month on this program, was what's this first deal going to look like, right? It's going to be a framework for everybody else trying to come and get their own deals, and there are many of those other conversations ongoing right now. It also, the flip side of anybody saying, this doesn't look like the biggest, most transformative deal in the world, you can flip that on its head and say, well, this is what the cost is of getting a deal with the United States. Maybe it's not as high as everyone had previously thought. So there is an optimistic way to read this as well.
Yeah, I guess that's one way to look at it. It's not that difficult to get a deal done, at least optically. But Derek, we are heading into a very important weekend on the China-U.S. front. And our colleague Anne-Marie actually posed the question to the president yesterday, and she said, would you actually consider lowering tariffs on China if it meant that you could proceed forward with negotiations? And he didn't rule it out. So would you say that expectations are quite high into the weekend's discussions?
Yeah, it was a great question and a really fascinating answer. And look, the United Kingdom is one thing, but China is very much another. Look, China, as you well know, has been the main target of the U.S. tariff efforts and really has been since Donald Trump's first term, right? The trade war started in January of 2018 with Trump launching safeguard tariffs on washing machines and solar targeting China. So it has been a long time going. And in this second term, China is the main focus. It's the highest tariff levels. Now, Trump did tell our Anne-Marie Hordern at the White House, as viewers will have seen, the 145 levels may not be where things stay. Let's see what happens with these talks. If they go well, as we've reported, there is a chance that they could come down quite significantly, maybe to the levels that they were at all the way back in early April. I know that's just a month ago, but early April, before the Chinese retaliation and Donald Trump's retaliation thereafter. So, yes, that, again, the idea of going back to a 1 month ago baseline does not necessarily seem like it's the most radical of steps. But at the same time, if you're sort of sitting there looking at current policy, which is I think what you kind of have to do at this point, boats are in the water, boats are trying to come over, cargo's facing the tariffs right now, then any sort of movement down, if that were to happen, is significant.
Yeah, I mean, essentially trade has been cut off between the two sides now. So very valid point, actual shipping. Bloomberg's Derek Wallbank, thank you so much. All right, let's pick up the conversation. Joining us now is Stephen Rees, JP Morgan Private Bank, MENA and Turkey Head of Investments. Maybe a good place to start, actually, is the market's expectations / hopes into the discussions this weekend. I mean, it could be a game changer if they come out of this with a significant reduction in tariffs.
It really could be, and you see how the markets are reacting to every development on the trade front. Of course, the news with the UK yesterday and now expectations over the weekend. We're optimistic, but we're not positioning for the best possible outcome. We think it's going to take time. But it really is all about trade right now. It's the lack of certainty that's holding markets back and keeping them from recovering and reaching new highs.
Yeah, what are your clients actually doing in this environment? Are they retrenching? Are they sitting on high cash levels? What has been the overwhelming response to the volatility?
I think they're really rethinking what it means to be diversified. I mean, the U.S. has outperformed for so many years that I think a lot of clients found themselves underweight other parts of the world, and they're now starting to correct that, and that's something that we really believe in going forward. But really kind of understanding the importance of a global multi-asset portfolio. So it's not just about equities, but there are other things like infrastructure, fixed income, hedge funds, and gold that have actually smoothed out the ride. We went through a really difficult month in early April, but if you owned all those things together, the ride was actually much smoother. So I think that's the name of the game going forward. And that's what we're helping our clients do.
Yeah, I wonder whether these are actually tactical considerations or more long-term strategic, because there's a reason U.S. equity markets have outperformed the rest of the world. Europe has had competitiveness issues. China's been held back. The economy's been held back by property woes. Are those things materially going to change over the medium term? Or is this just a tactical allocation because the U.S. has been so bumpy?
I think a lot remains to be seen in terms of the deal with China, but we are not giving up on the potential in the U.S. and the amount of growth and innovation that you get in that economy. I feel like the sentiment shifted very negatively against the U.S., but you can't forget the technology sector, the healthcare sector, and all of the great parts of that economy that we want to be exposed to longer term. So I don't know if it's going to solve itself in the next weeks or months, but longer term, we still are very much committed to owning the U.S. for that growth and innovation that you don't get in other parts of the market.
Is Magnificent Seven still a popular trait amongst your clients?
It's funny, sentiment's turned quite negative, but you look at a lot of these names down 20 to 30% from their peaks, but yet the earnings haven't gone down that much. It just means that the stocks now are more attractive. So long term, I think we are leaning into technology, and it's a bit of a non-consensus trade now because everyone wants to own safety and everything else, but we do think there's opportunity longer term.
The results were solid. You got
the results are solid. The outlooks
Microsoft
were uncertain, and that was consistent across the board. Everyone, or most companies, reported solid results, but they didn't want to comment on the future, and so that's why it's so critical to get more of these deals through as soon as possible. And so that's our hope.
What about gold? Gold, the good diversifier, it's done really well. It had a great run-up in the first quarter of this year. But I also just think now, in an environment where we've probably reached the peak rhetoric of tariffs, anything from here onwards will be de-escalatory. Can gold still perform?
Yeah, gold's been one of our highest conviction calls over the last year, and so we have owned it. I think the difficult part is it's run so far. We want to lean into that and buy the pullback. You're right that we're hopeful that the world will stabilize and trade will be negotiated, but if it's not, you're going to want to own gold. And so it has performed as expected on the days where equity markets sell off, volatility increases, you're happy to own gold. And so we generally tell clients to build up a position, 5%, perhaps a little bit higher in this environment. We don't think the volatility is going to go away tomorrow. I think it's here to stay. There's a lot happening in the world, geopolitics, risk of inflation. I think there's enough reasons to keep gold in the portfolio. And perhaps hope that it doesn't work, hope that everything else works out, but it's nice to have.
Yeah, there was that week where seemingly every day gold made a new all-time record high, but silver didn't participate in the rally, and our colleagues were just drawing on the fact that the ratio between the two was something like 2 standard deviations rich or something like that.
Yeah, and that might be an opportunity. We're more focused on gold, but silver, I think, does move oftentimes in correlation. There's supply issues there, but that could be interesting for us to look at. More gold.
Yeah. Okay. Well, really good to have you with us.
Good to see you. Thanks for having me.
Thank you for joining us around the set. That was Stephen Rees, JP Morgan Private Bank, MENA and Turkey Head of Investments. Well, Cardinal Robert Francis Prevost has been elected as the Roman Catholic Pope, the first ever to come from the United States. Prevost has chosen the papal name of Leo XIV. The new leader of the world's 1.3 billion Catholics is seen as a possible bridge between the moderates and hardliners of the Church. Prevost was a protege of Francis and previously served as Archbishop in Peru. And coming up, we discuss U.S. Gulf relations as President Trump plans to visit the Middle East next week. Hasan Alhasan from the International Institute of Strategic Studies joins us next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The U.S. is developing a fast-track process for screening foreign investments, an effort government officials expect could smooth the way for billions of dollars of inflows from wealth funds in the UAE, Saudi Arabia, and Qatar. The process would include gathering information from investors based in partner nations before they file for deal approvals from U.S. regulators. It aims to eliminate a major hurdle for Middle Eastern sovereign wealth funds, which have drawn scrutiny over their perceived close ties to China, and comes ahead of President President Trump's visit next week. Joining us now is Hasan Alhasan, Senior Fellow for Middle East Policy at the International Institute for Strategic Studies. Major week coming up for the GCC with Trump's visit. And of course, he is traveling to 3 different countries within the GCC. But as we know, this is a president who, as a president of deal making, he's got a transactional nature. What are we expecting in terms of deals and big headlines to come out of his trip next week?
Yeah, that's absolutely right, and I think we've already had a taste for what that could look like, and so I think there's been talk of a potential grand announcement, so to speak, that might have to do with the naming of the body of water that separates the Arabian Peninsula from the Iranian plateau, and there are expectations potentially that Trump might officially deem this to be the Arabian Gulf, which is obviously a very controversial issue between between Arabs and Iranians on both sides of this body of water. But beyond this sort of symbolic gesture, there's also been talk of a potential $100 billion arms package that President Trump might unveil during his visit to the region. And as you said, there are potentially measures that are going to be put in place that's going to make it easier for sovereign wealth funds from the region, who are some of the largest sovereign wealth funds and most active deal makers in the world, to begin to invest more money into the United States and face potentially less scrutiny from CFIUS. And there are also potential expectations that the U.S. could ease some of the restrictions on access to advanced U.S. technology and semiconductors that were put in place in the last days of the Biden administration. All of these would be very significant announcements for the Gulf states. And I think in return, the Gulf states have also made very large investment pledges into the U.S.
Yeah, so all of these are sort of along the business and economic strands. Are we not expecting any major geopolitical breakthroughs, either when it pertains to a big announcement on Gaza, which is something that President Trump will also briefly tease this week, or developments on U.S.-Iran?
So I think the big point to remember here is that the Gulf states have been trying to work alongside with the U.S. on some of the big geopolitical issues, both regionally and globally. And so Saudi Arabia, for example, has been hosting talks between the U.S., Ukraine, Russia to bring an end to the Russia-Ukraine war. The Omanis have been facilitating ceasefire negotiations between the Americans and the Houthis, and have hosted multiple rounds of talks between the Trump administration and the Iranians. And of course, Qatar continues to work as well with the U.S. on bringing about a lasting ceasefire in Gaza. So the Gulf states, I think, have already been working with the U.S. on some of these big regional issues. The Palestinian vice president was yesterday in Saudi Arabia, had a meeting with Saudi Crown Prince Mohammed bin Salman. And so it's, I think, very much likely that these big regional files are going to be on the table. The issue, I think, is that the Gulf states have found it difficult to have a productive conversation with the United States on many of these issues because I think Trump has made some widely unacceptable proposals on the depopulation of Gaza, and I think has so far been unwilling to restrain Israeli behavior in Syria, Gaza, southern Lebanon, and elsewhere. So Israel continues to launch strikes in various countries, notwithstanding Gaza and security operations in the West Bank. And I don't think that we're seeing a very large appetite by the Trump administration to do anything really to restrain this. Now, I think there are some potentially brighter spots. So the talks with Iran seem to be going better, and that could be something that the Gulf states could contribute to by offering, again, to mediate and facilitate.
Yeah. Let me just bring it back to perhaps the fact that the president, the United States president, chose his first major diplomatic trip abroad in the GCC. How does this mark a foreign policy shift from his predecessor, President Biden? And how is President Trump viewed differently from his predecessor?
So I think it's quite clear that the optics of the Gulf-U.S. relations under President Trump have always been, and the atmospherics have always been more positive and more constructive than they have been under Democratic administrations like those of President Biden or even President Obama. I think it's not entirely surprising. I mean, if you think about it, in President Trump's book, the Gulf states are actually, almost near perfect partners. They run a trade deficit with the U.S. They buy a lot of U.S. weapons and a lot of U.S. arms, and they've made, colossal investment pledges into the U.S. economy, which is something that is at least symbolically significant for Trump's own domestic economic agenda. Saudi Arabia has pledged around $600 billion, at the UAE $1.4 trillion. And the question of whether that's feasible, given the current price environment of oil hovering at around 60 degrees, is a whole other matter. What matters here, I think, from the Trump's perspective is the headline. So I think, in a sense, the Gulf states are really excellent partners for Trump. They've also catered for his personal and family business interests, and we've seen a number of deals announced with the Trump organization in various Gulf countries to build Trump towers and golf courses. And Jared Kushner's own investment outfit has been able to, Affinity Partners has been able to raise billions from the region. And then, of course, as I've said, the Gulf states have made themselves quite useful to Trump's sort of conflict resolution agenda, which is something that he had also campaigned on.
Yeah. Hasan, thank you so much for setting it up for us. Hasan Alhasan, Senior Fellow for Middle East Policy at the International Institute for Strategic Studies. Thank you. Well, still ahead, Ghana's inflation rate fell to an 8-month low in April. The details coming up later on the show. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. President Trump is calling for a 30-day ceasefire between Russia and Ukraine to pave the way for talks on a lasting peace deal. In a social media post, Trump also threatened further sanctions if such a ceasefire was not respected. Earlier, Ukraine President Volodymyr Zelensky said he had a good phone conversation with Trump discussing peace efforts and coordinating future contacts. Russian President Vladimir Putin and his Chinese counterpart Xi Jinping have met in Moscow, emphasizing the alliance between their countries. The two leaders warned the risk of nuclear conflict has increased and called for nuclear powers to maintain constructive relations to ensure international security. They also pledged to strengthen military cooperation, discuss the Power of Siberia 2 gas pipeline project, and announced a record $245 billion in bilateral trade in 2024. India and Pakistan say they've shot down drones and missiles over densely populated areas in a second day of military hostilities. Pakistan Army says it took out several Indian drones over cities including Lahore, Rawalpindi, and outside Karachi. India says it neutralized Pakistani drone and missile attacks on Wednesday and Thursday targeting military sites. No casualties were reported by either side. And coming up, as Ghana's inflation slows in April, we discuss the drivers and whether that can continue. Next, this is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Let's make a deal. President Donald Trump agrees on a trade framework with the UK and now looks to China. U.S. negotiators weighing a dramatic tariff reduction for Beijing as they head into talks in Switzerland this weekend. Fast track. The U.S. Treasury plans a streamlined process for foreign investments, paving the way for billions of dollars to flow from wealth funds in the UAE, Saudi Arabia, and Qatar. And Mideast mission. Preparations are underway for President Trump's first major overseas diplomatic visit, bringing business leaders to bolster investment ties across the region. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. So a positive close for Wall Street yesterday. S&P up 0.6%, Nasdaq up 1%. The positive momentum continues as expectations build into the discussions between China and the U.S. this weekend in Switzerland. Treasury Secretary Scott Bessent will be there alongside the Vice Premier from China. So expectations high, I would say. But this on back of that UK-US trade agreement that was reached yesterday. Lots of headlines there. Perhaps slightly thinner on details, but does perhaps suggest that the bar for getting these trade agreements done is slightly lower, as our colleague Derek Wallbank was suggesting earlier. Today, S&P futures, though, trading mildly in the green, so up about 0.1%. 10-year yields, we moved about 12, 13 basis points higher yesterday, so quite a substantial move higher in bond yields, but perhaps a lot more orderly than the bond market moves that we had a couple of weeks ago. So 4.36 is where we're at. Brent recovering from the early days of this week where we touched $59, now back at 63, so 0.4% firmer as we get towards the end of this trading week. And then Bitcoin through $100,000 again. We're back at 102, levels not seen since February. Flipping over, let's take a look at how the pound has fared. Why? We had the Bank of England meeting yesterday. They did go along with that rate cut, but the three-way split caught the market by surprise. You had two members of the MPC who voted for no cut. Two of them voted for 50 and the rest voted for 25, which is why we ended up with 25. But the initial reaction was that this was quite a hawkish cut from the Bank of England, and with the governor keeping that gradual language in as well, suggesting that there isn't going to be a fast-paced rate-cutting cycle coming. So this is where the pound is trading, still a bit weaker for the last 5 trading days, down 0.3%. Now, the U.S. president's highly anticipated trip to the Middle East is now only days away. And the Trump administration is developing a fast-track process for screening foreign investments in the U.S. as it eyes billions of dollars from wealth funds in the UAE, Saudi Arabia, and Qatar. Very happy to say that joining us now are two gentlemen. We've got Bloomberg's senior Middle East reporter, Sam Daghir, and Bloomberg's Dan Williams, who's also been in Dubai all of this week. Major week coming up. Sam, let me start with you. The bulk of the president's trip is going to take place in Saudi Arabia. Quite simply, what are Saudi Arabia looking for out of this visit?
Absolutely. Good to be with you. I mean, I think the thrust of the visit is going to be about investments and deals, because that's good for Trump back home, and that's good for the Crown Prince Mohammed bin Salman in Saudi Arabia, given his ambitious, Vision 2030 plan. So expect, I mean, I'm being told there are potentially 100 agreements that are going to be signed in everything from AI to transportation. There's going to be a big a critical minerals deal. I mean, Saudi Arabia last year, I think, estimated its reserves of these precious minerals at 2.5 trillion. So expect a big deal on that. And there's going to be obviously some defense contracts. Maybe something on nuclear cooperation, but we're not sure yet. Yeah. So I think the Saudis... Please go ahead.
No, I was going to say, so that's the deal-making. But
Exactly.
Is there a sense that this deal-making may herald or usher in some breakthroughs on the geopolitical side?
Absolutely. I mean, that's the way Saudi Arabia is looking at it. They're looking at, basically these deals with President Trump in the U.S., as well as the strong, intrapersonal relationship between the Crown Prince and President Trump as the foundation, as the leverage in order to advance their own vision for regional stabilization and an end to all wars, which Trump says he wants as well. So I think they're going to talk about obviously ending the war in Gaza. They're going to talk about a pathway to Palestinian statehood. They're going to talk about giving transitions in Syria and Lebanon a chance. I mean, that's how Saudi Arabia looks at it. They're going to talk about the need to continue the dialogue and the talks with Iran. And Saudi Arabia emphasized that by actually dispatching the Crown Prince's brother, the defense minister, to meet with the Supreme Leader himself to say, we are with you on this in terms of the need to continue the talks with the U.S. And obviously, political solution in Yemen, and we have the truce. They want to build on that. So in a way, I mean, what Saudi Arabia is pushing is somehow I would say diametrically opposed to the Israeli strategy at the moment.
Let's talk about that with Dan. So President Trump is not stopping by Israel on this trip. What is the Israeli official perception of what is going to take place this week? How is it being treated back home?
It'll definitely be followed. I think there's no question that Israel feels on the periphery, literally geographically on the periphery, as you noted, given Trump's itinerary. Sam ably alluded to the question of sequencing. This has long been a matter of dispute between Saudi Arabia, the Middle East powerhouse, Israel, the Jewish state. They've been talking about normalizing for several years now. Israel likes to say that victory, as it defines it, victory against Hamas in Gaza, victory against other Iranian proxies, victory against Iran itself, however that might play out, is key to establishing its credibility among like-minded Arab powers, like-minded geostrategically, such as Saudi Arabia. But as Sam said, it appears the Saudis have a different view now. They'd like to calm things down and then see if there can be a diplomatic arrangement worked out. So I think what Trump will discover is that business deal-making is easier this time than peacemaking. The question is whether the two types of makings can be brought together, can be fused together.
Well, earlier in the week, you and I were talking about the truce that Sam just referenced with the Houthis. And there also was a perception there that in those discussions between the U.S. and I guess those Houthi representatives, that Israel was sort of sidelined because they weren't privy to the agreement. What does that tell you about the nature of the relationship right now between the White House and between Netanyahu's government?
Well, it's actually more than a sense. Yesterday, the Israeli foreign minister said so on the record in an Israeli TV interview. He said Israel was not pre-informed about this deal between the Trump administration and the Houthis. Publicly, the Israeli officials are trying to put a positive cast on this, saying that obviously both countries, despite their close alliance, have their own policies, have their own strategies. Without a doubt, this is something that will be troubling the Israelis. I think they wanted to be in lockstep. They saw themselves as being in lockstep, especially with this U.S. president, and it would appear that he might be slightly impatient with the pace of progress when it comes to Israel, when it comes to Gulf Arab states, given the different political dynamics. Deliverables are deliverables. Israel's a very fractious democracy. It has various dynamics that make it very difficult to deliver a clean package in time for this visit.
Yeah. Sam, let me just ask you, on the back of that, in Trump's first term, his major achievement was the Abraham Accords. Is there going to be any chatter about expanding the Abraham Accords this time around, then that potential Saudi-Israel normalization? Is that on the table?
Not under the current circumstances at all. I mean, with what Israel's doing. I mean, you have Saudi Arabia coming out, on the Crown Prince himself, accusing Israel of waging, quote-unquote, genocide against the Palestinian people. You have Saudi Arabia backing what the UN is saying about Israel waging a war without limits and also using food and starvation as a weapon of war. You have Saudi Arabia. I mean, I know there's a tendency in Israel to kind of dismiss that a little bit, but actually that's quite very important. I think, yes, there is strategic alignment between Saudi Arabia and Israel on a lot of things in terms of the common threats, Iran and the proxies, absolutely. But I think the way the Saudis and others in the Gulf see it at this point is that now is the time to actually take advantage of the weakening of Iran and its proxies to actually come up with a political and strategic, plan that's going to leverage those gains on the ground. That's how the way they see it, and that's how they're going to try to sell it to President Trump. That yes, Israel achieved a lot. I mean, not in those words, but in terms of this is the moment to take advantage of the weakening of Iran, but what they see on the other side is Israel waging war for the sake of war. I mean, that's how the Saudis see it at this point.
Yeah. Dan, let me come back to you. Do you think that the upshot of this trip is that by the end of the week, we will have a better understanding of, obviously, the deals that are going to be signed and agreed to, the economic arrangements, financial arrangements, but also the balance of power now in the region and the way the region has evolved in the last 12 months, with Iran seemingly on the back foot, the re-emergence of Israel as perhaps a more dominant force in the region, but then also Saudi Arabia reasserting itself as a very outspoken diplomatic country in the region as well.
I think there's no doubt that certainly over the last year, Israel has established a military virtuosity that's been recognized by everyone. As Sam noted, the Saudis and the Israelis have for a long time been coordinating on those core defense issues. So the question is, if Saudi Arabia is already getting what it wants in that field, why does it have to take the extra step with everything that might be involved in terms of domestic prestige, Arab prestige, cross-Muslim prestige, in terms of engaging with an Israel that's still at war, conducting war that's very unpopular in this part of the world. Israel sees it the other way. It sees its credibility as a peace partner, as a security guarantor, as being hinged on winning this war. It says that if Hamas is left standing in the Gaza Strip, then other wings of the Muslim Brotherhood will be encouraged by that. And if anything, potential future partners will look at that as a failure. They may not state so publicly, but that's what they'll be saying in private. And if anything, that may cool their ardor for open, peaceful engagement with Israel in the future.
Yeah. Dan, Sam, thank you so much for your very informed analysis and reporting. It's going to be a big week next week. Bloomberg senior Middle East reporter Sam Dahed and Bloomberg's Dan Williams. Thank you very much. Ghana's inflation rate fell to an 8-month low in April as its world-beating currency helped rein in import costs. CPI slowed to 21.2% compared with 22.4% the month before. For more, Bloomberg's Sanjira Ganga joins us now from Johannesburg. So as CPI moving in the right direction, it would seem, why are we getting slower or lower CPI figures out of Ghana?
Hi, Jumana. So a couple of factors are driving this economic stability and recovery that we're seeing in Ghana. One of them is their currency. It has begun showing signs of stability, and this is the first time that it's doing this in a period of 3 years. And if you look at this currency, if you look at 2 years back, when the country defaulted on its debt, it lost 60% of its value to the dollar. And leading to 2024, it has been depreciating by about 19%. But since the new administration came into power, they have begun cutting government borrowing and also reducing government expenditure. And as a result, we are seeing stability on the currency. Another factor is gold. Production has increased, and this is coinciding with higher prices in the global market. And if you look at data from the Ghana Gold Board, it shows that in 2024, gold earnings of $4.7 billion. In the first quarter of 2025, it's $2.7 billion. And if the same upward trajectory continues in the international market, then the country is bound to make more. Another effective instrument that the current country is using is the central bank. We have seen the central bank hike rates by 100 basis points, surprisingly, to bring interest rates to 28%. And this has helped anchor inflation. The central bank says that the goal here is to re-anchor the disinflation process. And once inflation is firmly anchored, then they're going to reassess the rates and maybe begin easing the cycle. But until that happens, they remain firm. The government is a little bullish, rather. It says that it's projecting inflation to fall to about 11.9% by the end of the year. And they're just banking on the fact that they'll be able to adhere to their fiscal consolidation measures. On the other hand, the central bank cautiously optimistic, putting inflation at 16%. And they say this is because of global uncertainties. There's currently a tariff war going on. Then you couple that with volatilities in the global market, and also the ability of the government to adhere to this fiscal consolidation measures that it has put in place. So this is some of the factors that are propping up this economy, not just the currency, but also helping ease inflation. And we're likely to see these numbers translate into growth when the GDP numbers come out.
Earlier this week, we were talking about, or was it last week? I don't know, the days are flying by. We were talking about President Trump's 100 days in office. But of course, President John Mahama has also been in office for 120 days after quite a big victory on his side. How would you say his scorecard is tracking right now in terms of economic performance?
Jumana, numbers don't lie. The man has done well for himself, and he has gone a long way in honoring some of the pledges that he made during the campaign season. If you look at the country, he outlined the steps that he's going to take in order to reduce budget deficit by half. It was at 7.9% in 2024, and he intends to bring it down to 3.1% this year. And as a result, we've seen government borrowing drastically fall to the lowest it has ever been in the first quarter in the last 3 years. As a result, also, yields on government T-bills have fallen to the lowest level in 3 years. They've gone from 15.5% in the year 2024 to about 12% this year. Another thing that we have seen being impacted is Ghana's stock exchange. They have risen by about 24% for the local currency and 17.4% in dollar terms. These are just some of the numbers that are coming out of Ghana. Other reforms that he has introduced, he has brought in a very lean government. He's also introduced measures to curb corruption. And what he's trying to do is create a favorable environment for the private sector by scrapping off taxes. However, more needs to be done in terms of ensuring accessible energy, ensuring accessible credit due to lower interest rates, and also airtight policy so that this can last longer.
Bloomberg's Ondir Oganga in Johannesburg this week. Thank you so much for the reporting there. Excellent stuff. All right, coming up, we discuss the world of aircraft leasing within the aviation sector with Firoz Tarapore, the CEO of Dubai Aerospace Enterprise. That conversation next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Let's turn to commercial aviation. And Dubai Aerospace Enterprise has completed its $2 billion acquisition of Nordic Aviation Capital. Following this deal, DAE's fleet consists of 750 aircraft. Of that, the firm says 650 planes are on lease to 161 airlines in 74 countries. For more on the state of the aviation sector, tariffs and Boeing delays, joining us now is DAE CEO Firoz Tarapore. Really good to have you with us. So you just completed this $2 billion acquisition of Nordic Aviation Capital. What other deals are you looking to get into?
I think for us, the most important thing is that we consume this deal properly, so we integrate it well, etc. And then once we do that, I think, as we've said publicly, we're not done. So we need to further grow our leasing business. And then once we do that, we can look at what other things we could do. But for us, it's digesting this deal properly, because we just announced it day before yesterday, and then moving on to the next one.
And for the strategy, are you thinking of buying so the portfolio of other companies, i.e. jet planes owned by other companies, or the entire company? How are you thinking about this strategy?
For most aircraft leasing companies, those two are almost the same. So, to the extent that we can acquire an entire company, we'd be delighted to do that. But to the extent that a company just wants to sell us a portfolio, we could do that. We've done both. For us, the scale that we need is better accomplished through doing something much bigger than smaller kind of piecemeal acquisitions.
So I've spoken to many airlines over the course of the last couple of weeks, and one of the big topics obviously is tariffs. The other is those delivery delays. And by the way, the two are perhaps a little bit linked. Let me just start off by asking you, first of all, has your business benefited because of these delivery delays, i.e. have airlines opted for leasing more planes in the interim while they wait for deliveries?
Yes. So the demand for passenger travel is very high, and airlines just can't accept the fact that they don't have enough planes to satisfy that demand. So if they can't get the new ones, they're keen not to let go of the old ones. And we've seen a benefit as an industry, both in terms of values and prices and all. So all of that is there. But, if you ask us, what would you rather have, that or no delays, we would err on the favor of no delays, because that's a good transition into clean, fuel-efficient aircraft sooner rather than later, and a much more orderly functioning of the market.
And I believe you have an outstanding order of the Boeing 737, the narrow-body jets. When are you expecting delivery of those planes? We are taking delivery as we speak, but I think it's fair to say that the delivery rate is less than half of what we thought it would be, so much lower than what we anticipated, because of a variety of issues that we all know that Boeing is going through. But it's getting better, and we think that it will get even better as we go ahead. And how are you thinking about the impact of tariffs? I mean, again, lots of scope for discussion there. Nobody really knows where we're going to end up, but assuming things stay where they are, what sort of an impact would that have on your industry? Yeah. So for us, when we look at tariffs, which, as you say, is a fluid thing, there are multi-order effects that we need to worry about. The first one is the obvious one, kind of who pays for it. It's contractually very clear who pays for it, but I think that the business model is not tenable, meaning regardless of who pays for it, we don't have room in the airline business model or OEM business model or the lessor business model to accommodate that extra outflow. So that is a reality that we will deal with. The second is, kind of demand dampening. So if fewer goods
need to move because there is lesser trade, if fewer people need to move to make those deals happen, we will see a corresponding reduction in demand. Then we have, in our opinion, kind of demand shock. So, for example, people adjust their discretionary incomes to accommodate for the fact that they're paying more for other things by traveling less. That's an issue that we will deal with. And the last one is the one that, it's kind of small, but we don't know how it's going to go. It's just pure patriotism. So what you see in Canada is people just refusing to travel to the U.S. And a large airline reduced their summer schedules because people are just not traveling. So when you put all that together, these are very many moving things. The good news from our standpoint, silver lining, I should say, is that at any point during the last few years that somebody said, oh, I don't need the plane because somebody else has stepped in and said, can I have that, please? So the overall demand pool is still very exciting.
And let me just ask you quickly, last question from my side, but where do you think the fastest growing markets are going to be in the next couple of years?
I think the fastest growing markets by extension are where the fastest growing population clusters are in the world and the fastest growing disposable incomes are in the world. Because the faster you grow disposable income, the larger number of people you can have going from not having traveled before to having traveled. And then once you do that, that pool expands quite exponentially, quite quickly.
That makes sense. Really good to talk to you. Thank you so much for giving your perspectives. Firoz Tarapore, the DAE CEO. Now, more news coming up here on Horizons Middle East and Africa. Stay with us. This is Bloomberg. Bloomberg has learned that Apple's Silicon Design Group is working on new chips for future devices. Sources say the company has made progress on a chip for smart glasses with mass production planned by 2027. Apple is also said to be developing new Mac chips, AI server chips, and other semiconductors for camera-equipped AirPods and watches. Nice end of the week story for you. Quick look at equity futures. Things are leaning towards the green. Big weekend coming up with China-U.S. trade discussions. And of course, we will be live in Riyadh on Monday for President Trump's big visit to the region. We'll be there all week. That's Horizons Middle East and Africa.